I'm going to avoid speaking about any of those micro caps, but we'll talk, for example, Gilead. I mean, Gilead was headed higher before coronavirus. If you go back and look, this is sort of the tailwind for them on what had been a story that was improving with a balance sheet that had been improving. So Gilead makes sense. I think Pfizer, to your point, Pfizer had been beaten up. That makes sense. Merck's had a move from, I think, 95 down to 79. That stock has bounced. That makes sense. Eli Lilly's its own animal. So I think big cap pharma, despite what the president says about them being too rich or ripping people off, I'm paraphrasing, I still think those stocks are fine. And again, in terms of a vaccine for this, they're talking about something a year away. Hopefully this is going to be long over before that.
Gilead also stepped in and had a $5 billion acquisition today of 47, which increases their presence in their oncology and hematology. The issue with that for a lot of the analyst community, from what I've read, is that it doesn't necessarily move the needle on their $20 to $21 billion revenue line, which is something that they're very concerned about and has been dragging Gilead down because HCV and HIV are still things that are looked to be at least drug pipelines that are slowly dwindling. So again, I agree. Biotech had been outperforming this year, had actually been, along with healthcare, a place where investors were actually continuing to find both valuation and earnings, and I think they will.
If you look at how IBB traded as well, I mean, it actually is fairly constructive. Bounced off the 200-day moving average. It's had a very big day here. I think in this environment, though, you can wait for this to break out above 125 rather than trying to be a hero and buy it on a down day.